Good morning, good morning, good morning. Good morning, traders. Good morning, everybody. Good morning, Stelios.
Good morning, Sir K. How are you?
Yeah, we're doing well. We're doing well. We're waiting for the next biggest ever data point in our lives. Everything about the CPI today, but if you don't care about the US CPI, then you may as well have a look at what the Canadian Bank of Canada is going to do. And if you don't even care about that one, then you have to listen to all the central bankers, all the finance ministers being at the World Bank, the IMF, the G20 going on this week. There's plenty to look at or listen to. Yeah, how are you doing this morning, Stel?
I'm very good. We are indeed waiting for Godot. No, actually waiting for US CPI. And it's an important one. I mean, obviously it's an important one, but I think it's extra important today because we've had some kind of divergent tunes from Fed members. So we had Williams being on the hawkish side saying, oh, there's a lot more work to do. And we had the Chicago Fed president, I can't remember his name. Yes, who is also voting, who said that, we need to be patient and prudent and see what happens. So, hinting at a pause if the numbers merit that. So and we have the minutes as well. So it's, I think we're getting to a point where this tug of war between the Fed and the markets might resolve itself. So far, the markets have been losing. They have to adjust to what the Fed has been doing. But at some point, that's going to stop. Is this the meeting? Yeah, maybe.
Could be, could well be. And yeah, you actually they've all been there, right? Williams, Goolsbee, Harker, Kashkari, and we see some, as you say, divergence between those who want to continue to press on the tightening pedal and those who now want to build in a pause. It's a bit an all-round thing. It had to come one day, right? We know it had to come. The tightening cycle should be coming to an end, but there was this some divergence coming up, which is, I think, kind of normal when you arrive at the end of a tightening or the possible end of the tightening cycle, that you will have louder calls by either those who want to continue the hawks and those who want to build in a pause. And Goolsbee is one of those. Definitely, he's one of the more dovish members that joined the FOMC lately. Besides that, there's going to be more of them talking. We are also going to see the FOMC minutes later on today, where we should have an idea about what they think about this all this banking stress and situation as well, which it was already happening, right, when they had their last meeting. So there should be something about it in the minutes as well. So that's another thing to look out for. But let's look at some other headlines that we had overnight. And it's not, well, I mean, there's only one big geopolitical story at the front, hitting the front pages right now. The rest is bubbling underneath. There's a lot going on, but for what is the most pressing news is, of course, the situation China-Taiwan. China still going on with their drills, and now they called for an imposing of a no-fly zone north of Taiwan from the 16th to the 18th of April. The Taiwanese are reacting relatively subdued, or let's say tactically quiet about it. But then there was some comments out just a while ago from the Taiwanese officials saying that the China would have shortened the airspace restrictions on the 16th of April to just 27 minutes, probably when the most of their planes will do their drills and fly through the median line again. But anyway, it's something that we need to keep an eye on because, as we know, without wanting to pick a side. It's not our role, but we are looking at the possible impacts on markets and unrest in or worse in the Chinese Sea, and what's China is concerned may be market movers. So keep an eye on what's going on in the next week over there as well. Moving on, in other news, read some articles about the UK housing market activity is kind of back to 2019 levels, which is a decent achievement. But at the same time, reading quite a bit of stuff that the mortgage pain could start as September hits, because a lot of deals expire then. I think if I read it correctly, there's like 50,000 or so, the major ones expiring then, and which could put a bit of stress on the UK mortgage market. So that's one for diaries for when the summer will be over and we start Q4. In other news, just one thing back, because it's market related to China, is that the 10-year yield is dropping since to the lowest since September or November 2022. It's standing at 2.81%. We know the PBOC is continuing to inject cash regularly, and the market is starting to bet now more, betting on rate cuts actually in China. We know we had those rumors flying earlier this year already, saying that in Q2 they may cut the rates. So that's another one to keep an eye on for what us is concerned, the CNH, because we can't trade the local CNY. We have to trade the offshore CNH, and I think it's also one of the reasons, besides geopolitics, why the CNH is remaining on the defensive. Elsewhere, a bit of M&A, possible M&A news. It's been bubbling under the surface for a while, but US Newmont has sweetened a deal for Newcrest. So I think that's the biggest gold. Let me just try to find the article back. Where is it? It's the biggest gold miner that is raising its takeover bid for Australian rival Newcrest, and it's to the tune of $19.5 billion. So Aussie is not really benefiting from anything from that side, but keep an eye on that one if a deal would be agreed, because to a certain extent that may see some Australian dollar buying at the time of the conclusion of the deal. As I already said, it's the World Bank, IMF, G20 meetings are in full swing this week. So we're having a lot of central banks talkers. We did the Fed already. RBA's Bullock was out also overnight, and she was saying that the RBA would have paused even without the banking stress going on, that rates are in restrictive territory, and she wants to pause for a minute and watch the impact of the past hikes on the markets. She said the RBA underestimated the slack in the jobs market and also underestimated the fiscal and monetary power during the pandemic. So they basically underestimated everything, no clue of what's going on. And I'm actually surprised Aussie didn't get a knock on the head with a central banker coming out saying that they have absolutely no clue and missed basically the whole plot. But that's perhaps more in the to rank in the funny side of what they can do than really serious. It's actually pretty laughable, to be honest. Another one. Yes, yesterday we had some news about the UK. So the Bank of England will be replacing Tenrero by Megan Green. Megan Green is the chief economist of the Kroll Institute. We don't really know what she is go, or which side she's really going to be leaning on. I haven't really done too much of research, but it's hard to be more dovish than Tenrero. So I guess we will hear from her pretty soon and try to figure out which side of the coin she's leaning to. We also have Bailey to chat again in Washington later today, I think, and then tomorrow as well. So we are going to hear from more BOE central bankers there as well.
Okay, they missed an opportunity. They should have replaced Tenrero with Meghan Markle. I mean, make things interesting.
Yeah, but then how are you going to justify doing like Bank of England offsite meetings in the States? No, I don't think she would be too keen on coming over to England.
Buckingham Palace.
Huh?
Have the meetings in Buckingham Palace, maybe.
Oh yeah.
Oh no, they're not welcome anymore, are they? Anyway,
No,
sorry, bad joke. Bad joke.
Yeah, bad joke. Late Easter dad joke also. Right. Moving on to the Bank of Japan. And we had, yesterday we had Ueda speaking. Today we had Uchida, his deputy, speaking. And he says, so first of all, he was talking about the financial system, that the financial system in Japan is okay, ample liquidity. Then he said that the economy is still picking up. Must have heard that for the past 2 decades that the Japanese economy is picking up. But anyway, he sees the recovery still going on ahead. He also said that expects CPI gains to slow from second half of the, I don't know whether he was talking about the calendar year, but I reckon he's rather talking about the fiscal year. So that's second half of the fiscal year will start in September. So he expects those CPI gains to slow. And then finally, he said that they have to continue to the monetary easing to sustainably achieve their CPI target. So we're still in a Kuroda style comments from Uchida. And Ueda wasn't really too much different, apart from the end of his speech, apparently, where he said that, yeah, if the situation evolves rapidly, we might have to tweak more rapidly. But the overall impression, and we are seeing it in the yen right now, is that those guys are not going to be in a hurry to really not only get rid of YCC, let alone start to normalize monetary policy. Still, as we have been repeating, and as I've been repeating, and there's I think they have, and they will normalize in a certain way, but it may go a lot slower than the most hawkish people would have expected, in my opinion. And we've had some banking comments there as well. One of the Japanese mega banks, MUFG, said they expect the YCC to start to be tweaked from September, from the second half of this fiscal year. So, and I've read a couple of other comments as well from people close to the monetary affairs in Japan, saying that is kind of the timetable that people are expecting now. Some are saying we wouldn't be surprised if they start already to do something in April. We may have some comments in the April meeting talking about a possible revision of texts or framework, but my base case is still that they will go at it slowly, especially as well that we know that Ueda and Kishida already said that they will be working closer together. Now, just looking at my sheet here. Yeah, so about those IMF meetings, IMF came out with their spring report yesterday. It's all going sort of okay, but they are saying that the world economy is now entering a perilous phase, saying that this is where things can either continue to do as we are now, but it's possible that the economies are going to topple over if the inflation remains uncomfortably sticky. And they also commented a little bit on the Japanese monetary policy as well, saying that a more flexible yield curve control may avoid the market disruption. So they're also talking about don't go at it abruptly, but go at it slowly. But they are saying that it's likely time to start to think about tweaks. But they have to make sure that they don't disrupt the FX, the EM markets, sovereign bond premiums, etc., etc. So go for it, but go on it cautiously. And I'm sort of through my headlines. Stelios, did you see anything else you wanted to talk about before we move on to data and what's going to happen?
Not really. Yeah, there wasn't that much from yesterday. The only other thing is I don't know how much impact on the markets can have, very little, but worth noting that, the takeover of Credit Suisse by UBS, there was a vote in the Swiss parliament yesterday, and they are not happy with it. So they haven't passed it yet. So there is some kind of, I guess it's theatricals, isn't it? But there is a little bit of an uncertainty there. Eventually, I'm sure there's going to be some kind of resolution, but just worth mentioning that this is still not a done thing.
Yeah.
Yeah.
Yeah, I saw the same, and it did say, the lines did say that it's more like a theatrical event, and that they're not really going to stop much by doing so.
Yeah. It's like the debt ceiling, right? They're going to say stuff for the public and then go ahead and do whatever needs to be done.
Yeah, Swiss reacted yesterday pretty well by after one of the officials saying that the flood of flows is coming back after the Credit Suisse debacle to Switzerland, and Euro Swiss dropped a few points on that comment as well. Yeah, as you say, just seem more theatrical than anything else. Last little interesting thing of note is that Mr. Buffett wants to get back into Japan, so he's offering some bonds, trying to get some yen into the books, and is likely going to invest in the Japanese stock markets again. Apparently they have been doing for a while, but it looks as if Berkshire wants to increase their investments in Japan. So that in turn is probably sign of confidence on the one hand, but on the other hand, it may also mean that they might not be looking yet at the Japanese yields flying, which should weigh on the equity. So a bit of a sign of confidence there by the Buffett crew, right?
And when Warren Buffett looks at something seriously, I think we all need to do the same.
Yeah, exactly. But do we live long enough to reap the fruits from it? Yeah, you guys in Greece, yeah, because you always look at 30-year positions, so that should be all right. Right, data. There wasn't really much on happening yesterday. It was more on the emerging market sphere. Pretty decent industrial production out of Mexico. Dollar Mex is hanging around that 18 level right now, and more weak numbers out of South Africa. Dollar rand in turn is hanging towards its latest highs, back close to 18.5. The rest, not really much going on. Yeah, we had some Japanese data out overnight. We've seen CPI starting to slow there, but we're still above, well above levels where they were pre-pandemic. Very decent machinery orders coming out there. Less the month-to-month, less negative than might have been expected, but they came after quite a significant month. It's very, very volatile, those numbers. I wouldn't really hang my hat onto it to really trade the yen too closely on the back of it. And that's really it for what we had on the data front. So we are going to look ahead to what's coming out. We're having our weekly mortgage data. They had been improving just a little bit over the past weeks after some weeks of setbacks. We will then, of course, have the US CPI, which we will have a deeper look at in a minute. We also have the Bank of Canada. They're expecting to keep the hands still. They've been erring on the moderate to dovish side on the latest report. So I reckon there the statement might be more important than what they actually do here, unless they judged the latest labor reports to be strong enough to add a 0.25% again, and that which would be the surprise trade for the Canadian dollar today. That's really going to be the surprise trade. Then we have our usual weekly oil inventories. I may have a quick look at oil today as well, because it's trying to break free after a week of consolidation. And then I just want to look a little bit further ahead, because that's going to come out as well before tomorrow's return of El Hombre, Ryan from Spain. We'll have the Australian jobs report out. And I think that may be relatively important, and I will show the Aussie dollar once Telos is done showing his charts today. I will show the Aussie dollar, because we are on, whether it's weak levels versus what is euro concerned, what is the dollar concerned, but then pretty strong against the Kiwi right now, for instance. And this thing may send Aussie one way or the other. I think it's going to be an important report, especially after those defensive comments, let's put it that way, from the RBA members lately. This one could be a real mover. And then tomorrow morning we'll have the February GDP numbers out in the UK, and the manufacturing production data out as well. Seeing where we are, of course, cable will already have moved, but the sterling is a little bit on the defensive this morning. That against what I thought may be happening to the sterling. In fact, lately I thought sterling would behave a little bit better, but this could be a driver for the next leg of the sterling after the US CPI did this thing on the cable. And then we'll have tomorrow we'll have the German CPI data out as well. And do we have the Eurozone? No, only the Germans and the industrial production. So that's it for what is waiting. US CPI, Stelios, what's going to happen, mate?
US CPI, well, I don't know what's going to happen. But we are already expecting a pretty decent drop in the headline number. The core is expected to be roughly unchanged, 0.1 higher, whatever that is, on the year-on-year. I think that's probably fair. I've been saying for a while that I think that year-on-year numbers are going to be dropping, all else being unchanged, and we are seeing that. From a peak of 9 point something, I can't remember the exact peak. We're now close to 5%. And I think that's going to keep dropping. I don't think it's going to get to 2%, but I think a foray into the threes is very possible, and that, for me, is going to make the Fed reluctant to keep pressing on with the hikes. Having said that, what do I think about today? Today, I think the expectation is fair. If you ask me to make a prediction, I'll probably say we might continue the trend of missing slightly. So, 5 or 5.1. But even if it comes in line at 5.2, I still think that the trend is definitely there. The Fed's gonna for sure acknowledge that, and because let's face it, they don't want to be tightening too much. They know it's going to eventually cause the economy to have a recession. Already we're having issues, with banks, and employment, I think, will continue to worsen. So they know that. They're academics. They know the theory. And So my feeling for most central banks is that they don't really want to be tightening too much. Every time they get an option, they will choose the dovish one. So on a CPI 5.2 or lower, I think the market's going to like that, and you're probably going to see risk continue to grind higher. On a slight miss to the upside, again, I don't think there's going to be a big move. But if we do see a number, say 5.5%, or if we see core going up, 2-3 tenths, then I think that's going to be an issue. So, I think Goldman, a Goldman economist said, I can't remember the name, if we see a CPI of 5.5%, we might see down 2% on the S&P. I doubt that. I doubt we're going to see down 2%. And frankly, with position the way it is, if it's a small miss, any sell-off in risk, I think, is a buying opportunity. Even though it makes no sense, that's how I think the market is going to trade. Anyway, let's see.
Do you want to share your screen?
Yes, I will. Yes. Hold on a second.
Right.
Let me take the chart. Share screen, desktop 1.
And while you're doing that,
yes.
BlackRock said that they think the inflation will remain sticky. So just as an FYI,
okay,
they think the inflation will remain sticky. I personally agree with you. I've been saying that I reckon we are going to come out not too far from expectations. Of course, everybody will be looking at the core CPI because the Fed has told us to look at it, but I wouldn't dismiss the headline number either, especially if we would have a bigger slowdown. I think which if you have a 4 print, for instance, now, so that's a pretty big miss of 0.3. But if you have a 4 print now, then that is going to weigh quite heavily on yields, and at the same time be very, very positive for risk. Extremely positive for risk if we start to go below 5. But again, it's not my base case, right? It's not.
Yeah. No, I'm with you 100%. And you know what? I agree with BlackRock, but not with inflation. I think prices are going to remain sticky, but the rate of inflation is going to start dropping. Unless we get oil, $100 plus, that's going to change things. But all else being unchanged, I think we're gradually going to drop to a more reasonable year-on-year level. Not a target, but it's not going to be that far off. We're not going to be, 5, 6, 7%. I think somewhere around anywhere between 2 and 3.5% is where I think we're going to ease off and bottom out. But anyway, let's see. It's, who knows? We're making assumptions, a million assumptions.
And as you load your screen, there was also this divergence between the Fed Williams, who thought inflation is only going to go back to 2% in 2025, but I think it was Kashkari also who said, or is it Goolsbee, who said that we may be there already in 2024, which is makes quite a difference, I think, in the expectations. And if really is the case that it's going to come off faster, then we're going to be in your scenario where the Fed is probably going to stop and pivot faster as well.
Yeah. Well, let's see. We take it one day at a time, one number at a time, and CPI is what we have today. So I always start with yields. I've been talking about this, the bounce from this support, very, very important lows. I tell you what, if the number comes in below 5%, maybe not today, but I think we're going to be testing and breaking below this this level, because that will mean that the Fed's going to pause pretty quickly, and dare I say it, start cutting, maybe not as aggressively as the market is pricing, but it will be on their minds for sure. And let's also face it, they have hiked enough to have ammo now, to cut a little bit and see how things go. So they can test the waters if needed, if we get a recession, or if we get employment starting to really drop. The Fed is always proactive, or kind of proactive, on the way down, never on the way up. But anyway, so yields are a little bit trapped here between this support and the DMAs are converging, the 50 and the 200. I think a break above 364, the mid 360s will take us to 4% again. A break below the lows, my God, I think 250 to 275. Really, that's the next support, realistic support. So as I said, if CPI comes in below 5% or 4 handle, I think this is going to get tested very quickly. If CPI comes in above, say, 5.2, we're expecting above, say, 5.4, then I think we're going to be testing the 360s. As simple as that. There's a nice little range that we have here if anybody wants to play that, but we are kind of in the middle at the moment. Equities, again, broken record, very resilient. I'm reading about multi-year highs in short positioning in the S&P in leveraged money and funds and all that. So it makes a lot of sense to be short equities. But if you ask me to trade this today, I would buy it every single time, even though it makes no sense to me. And the price action is kind of confirming that. So on a weak CPI, I think we get to 4,200 again. Maybe not today, but I think that's the grind. And the most likely scenarios will break above. We take out stops. There must be 1 billion stops here, and then after that, I think that's going to be a nice selling opportunity, but not yet. So I think risk grinds higher. Interestingly, talking about risk, Bitcoin is broken, but it's kind of underperforming today. So equity indices are up today and Bitcoin is down, Ethereum as well. Maybe some profit taking, nice round number at 30K. But I think this is going higher as well. Don't ask me about, macro on cryptos. There's a lot of things I don't get with cryptos, but the price action is telling me that we're going higher, maybe with a little retest, $1,000 below here. That would be a nice technical move. But I think we are going higher in these. And, we've been saying this from this consolidation here, and we did break higher eventually. Talking about risk again, we look at metals and they are trying. Silver is very close to the all-time highs. The recent highs are, 2030, 2031. We are very close. And again, any pullbacks have been quickly bought. What do I think with CPI today? If it's strong, clearly metals are going to suffer a little bit. I still think it's going to be a buying opportunity. So gold, these highs here, anywhere between 1940 and 1955. I think it's a nice little area to test with longs. I'm probably going to try that. Silver is doing better. It has broken out from the channel. And the thing that I've been, I'm going to digress a little bit, but it's interesting. I had a conversation with a couple of friends of mine, very wealthy people, but not traders. And they were asking me about the divergence of spot silver and where they can actually buy coins. And they're like, why is there a 50, 60, 70, 100% premium? Some, not 100%, but 50% premium on physical, depending on the shop. And, they said, what does spot mean? I said, well, we have these futures, which actually, the long of the future, if you hold to maturity, you are entitled to physical to the amount of the contract. And that's why you see COMEX and the LBMA, they have available physical for delivery for these futures. In recent years, last couple of years, and especially recent weeks, these physical amounts available for delivery have been dropping fast. I mean, really fast, even as the price is going up. So at some point, what happens is somebody's going to say, you know what? I can buy a silver coin for $35 and probably sell it for like 33. So why not buy the future, I hold to delivery, I take my physical and I sell it. There's a clear profit there. Obviously, there's a lot of admin involved in that, but there's an arbitrage, a very clear one. And I've heard stories. I've actually, obviously not being directly involved, I've heard stories of longs in futures taking them to settlement, saying, right, instead of me giving you physical, how about I give you a 30% premium on your cash? I'll give you 30% more in dollars and you can leave me alone. So, if this is happening, I'm not saying I've witnessed it, but I've heard stories about that. If this is happening, then that's saying a lot. I think eventually the arbitrage between spot or the futures price, the near futures price, and where you can actually physically sell your coins, your bars, whatever it is, if it's big enough, people are going to take advantage. I mean, the market always does that. So with inventories declining rapidly, I'm not surprised at all to see this move being sustained, and even with price increasing, people are not replenishing their inventories. They're not selling back. They're not giving back physical to the exchanges. They're not taking profits, basically. So this is very interesting to watch. I am clearly talking my book a little bit, but there's a reason why I have the position, and I am long two positions, one from 21 and a half ish and one from under 25, so that's doing pretty well, and I have no intention of letting them go. Not yet, anyway.
We are the new roaring kitties of Silverbait. I mean,
yeah, I wish I had millions like that guy to play
we
with.
should have a Reddit group with 10 million followers and just take gold back to $50, mate.
Yeah, you know what? It needs a lot of patience. The way I trade, at least, needs a lot of patience. Very, very little leverage. And I've been saying this for a while. People who follow these webinars will know. The last time I had a big long in silver took about just under 2 years for it to perform, but it was, in the end, it did make around over 60%. So that's a nice little run, but you really have to be patient. And the most common mistake, I think, with trading things like silver is that you tend to exit too early. When the move happens, it's a big old move. I personally don't try to take 5 and 10% or something like that, and then job done. No, when a trade comes and it's the right trade, you have to let it run. Rule number one. So that's the way I do it. I'm not saying you do what I do, but that's how I'm trading it. Anyway, I digress. But
no, that's fine.
Silver has
very interesting.
Yeah, so silver has broken out in a big way. Could we see a retest? Yes, we could. And actually, after this, really big run, I mean, it's not even 45 degrees. It's almost 90 degrees, right? You can't have a 90-degree move, but you know what I'm saying? 20 to 25 bucks has been really, really, really fast within a month. So you have to have a pullback, especially with the RSI in the 70s. DSI is very high. Everybody's bullish silver. Every note you read, they're all bullish precious metals. I mean, there's a reason for this, and the market can stay overbought, bullish for a long time. I think there will be a pullback. How deep is the question? I think this breakout level here on these highs at 2460 is probably a nice area if we get that. But I'm staying put, and this just looks bullish to me. End of story. I'm not going to touch it for now. And if we do see a negative, a low CPI, I mean, I'm just gonna not even gonna touch this position. So metals look good. Even platinum is starting to look better. I mean, platinum is different. It's been underperforming, but it's coming up towards this excuse me, this high of the channel, so the resistance trend line of the channel. But as I said, of the three, silver with this breakout is looking the best of all. For gold, I really will need to see a breakout above the all-time highs, which are not that far away. Let's look at it this way. In terms of percentage terms, it's actually not too much. Oil is a tricky one. We've looked at this recently. It was a nice wedge. It retested, and then it just broke out straight up.
It's trying now. Huh?
It is trying again, yes. So this is it is, yeah. And frankly, with the production cuts, with everything that's happening, the only force pulling oil back is a potential recession in the US and elsewhere. But as with everything dollar denominated, if the Fed stops and pivots and we start talking about cuts, then I think the oil will have to break to the upside. It is trying now for sure. I'm not really doing anything with oil here. What are these highs here? 82.50. 82.50 maybe could be a nice little area for a risk reward short. Maybe the 200 DMA will converge to that point as well. Nice little resistance confluence. Yeah, you could try that, but with the market being like it is and as tight as it is, I would be very skeptical, or I would trade it in pretty small size. Currency wise, I've said it before. I think the euro, you put a gun to my head, I will buy it. I think 110 is the next level that we're going to test. A weak CPI today could even bring it today. You never know. Today, tomorrow. It feels like the path of least resistance is still to the upside in this. And yeah, not much more to say, actually. And this is in line with risk. In my opinion, the path of least resistance is to the upside. So that means the dollar's path of least resistance is to the downside. So the euro 110, I think, is the next target, after which it's going to be tricky. It will depend on a lot of things. So I don't have an opinion on that yet. Cable broke out the channel, came back in, or depending on how you draw it, that might have been a retest of the channel. It's trying to break out again. I still think that this is bullish, so I wouldn't be surprised if we see these highs get tested and maybe even get taken out in the next move. Euro pound, no man's land. I changed my bullish view to neutral when we hit the low 89s, and I had a 90 target. You guys know this. We didn't quite get there, but almost. But now we're in low man's land, and I have no interest to trade it. I will short it below. If we make a break below 87.2, I think that's a big level. Or if we edge towards the 89s, yeah, I might try to short there. But at the moment, I'm not touching it. Norway, I really, really want to sell Euro Norway and Dollar Norway. Euro Norway more than Dollar Norway, but the Euro is very strong at the moment, and I don't want to go against a Euro. Then the kroner, even with oil rallying, doing really well, it's failed to show any strength. And yes, we have the Norges Bank selling kroner every day, pretty much. And positioning is quite long, the kroner, so short these pairs. This is price action that I don't want to go against at the moment, but this is definitely one of the big trades that are on my radar to start shorting. Haven't decided on levels yet, so need to see. Let's actually check what the 1170, 61.8 is 1173, call it. That's a nice level. I might try that, but again, it's going to depend on price action quite a bit. Dollar Norway, yeah, we need to get towards these 11 highs for me to start looking at that. Otherwise, don't have that much in other currencies. Sorry, go on.
No, that's fine. I just want to reply to Horatio. Say, if you weren't already in silver, would you enter at market before or after CPI? For sure, not anymore before.
No.
I wouldn't touch it before anymore, because it's still a flip the coin. Regardless what we may think that may happen, but it's still a flip the coin. So and stuff like the metals is going to be, it's not going to be easier, because it's very volatile in percentage terms, but it should be a more straightforward trade than an FX trade, I'd say. Yeah, you still can do it after the CPI. I wouldn't go into anything here before the CPI, but if you're yeah, for those who don't have a position, I'd say watch those levels that we just shown. And you have a 24, 50, 60 on the downside. Then you've got like around the 24 level on the downside if the CPI would overshoot a bit. And you have that level on the top side, which is around 25, 3/4. If that goes, then it's probably we're off to the races. So you've got those levels. Catch those levels, I'd say, but it's a bit an unnecessary bet. Flip the coin before the CPI now, which is 3 hours away, 2 hours.
Yeah. And it depends on how you want to buy it and what's your horizon. Like my friend earlier today said, I want to buy a few kilo bars. and put them aside. And I said, well, buy anywhere, it doesn't matter, because if your horizon is measured in months or years, 2% here or there, it won't make any difference,
No.
in my opinion, in terms of the long-term potential.
No, but 10 may make a difference.
Yeah, exactly.
If you buy at 25 and it goes down to 22, it's going to make a difference. But then again, if you don't touch it for 2 or 3 years, but I don't think Horatio or many of the people on our chat are looking at that kind of horizon, but rather a shorter term one. And in that case, I think 2460, 2380 is going to be your first level on the downside. I'm still in my longs as well, and going to be patient if it runs, and I might actually add if it breaks 25 3/4.
I'm going to add 2 for sure.
And then stick with it until we go back to the roaring kitty level at $30.
Yeah, I think below 30 is probably something like 29 and a half. I'm going to unload a little bit.
Yeah, always take stop profits.
I've said for a while now, we're going to be looking at these levels in a year's time or 2, and we're going to be laughing because we're not going to see these levels again, I don't think. I know big words, etc., but I really feel very strongly about this. Okay. I don't know if you want to show a couple of things, but I'm
just done. A couple of them. Perhaps for the just a few of the majors. Dollar yen. Let's go from the longer term first. So the daily. I think I showed this yesterday. Today the bottom is around 132.5. Quite convenient. 132.20.50. That's going to be the level to watch on the downside. If that goes, I think then we could be back to those low 130s. That's going to happen if we really get a number. I'm going to say if we get 5 or below, we are going to need this number to get down in the context of what we've seen of late and the comments that we heard from the Bank of Japan members. Top side 134.10. This trend line. Thanks, Michael, our Australian friend, for showing this. I did miss that one. That comes in around 134.30 today. So if you then look at the shorter term, that level that I was showing already a good few times, 133.80, 134, the figure, it's all happening there, right? In 130, anywhere between 133.80. Well, okay, that's been run over now a couple of times, but then look at what's happening, 134, 134.10, 134.30. That's if CPI remains sticky, then we have, like, I reckon, a real chance of breaking this and going back to different levels, perhaps back into the 135s. And if that weren't to be enough, why not get a retest of this going into this traffic zone, which is anywhere between 135 and 137 now. That's the one thing. I know Stel already looked at the euro dollar, but I'd like to show just a little one here. If you look at the daily, there's an interesting trend line here now that built over the past months, and that's coming in at 106.85, 107. I think that's your level of no return. If I doubt it. I really doubt that today's CPI could bring us back down there, because the euro is kind of strong, and I'll show just a couple of euro crosses. That's going to be your level of no return on the euro dollar if ever it comes down there. If it really goes down there today, I think I'm not going to hold back much longer and try to catch a serious knife there. On the top side, we know the levels, right? 109. We are around an intraday one here, but it's going to be 109.75, and then back to the 110. There's a bit to do there around that previous high, and there's a bit of a flip there. But as we were already saying in the past, if that 110 would go on a weaker CPI reading, and I don't think the euro will need too much to be convinced. I'm also relatively still bullish on the euro. I've expressed it more via the euro yen than anything else right now. But I'm if it comes in weak, I'm going to try to buy euros, because I think then we have a fair chance for going to 112.25-ish, where there's a longer term trend line also still coming in there, which has had a bit of a say in the past, you know. And I think it's also a FIB 61.8 of that move here, and that could really be a fair target zone if euro dollar really breaks above 110. Cable, yeah, I'm not going to say too much about it. So would it be that 133.40, I think, is a good enough level to watch at in the short term? If ever we get a too sticky CPI in the US, we could get a move back down to 122.63, which is my make or break zone for the cable. Top side, we've got this broken trend line here, but it's rather moving sideways. If we get back above, for a starter, above 65.75 on the cable, then there's a possible retest of the prior high back through 125. And if that would go, there's a bit more activity on the more medium term 120 in the 126s, and then the longer term trend line is for the time being coming in around 127.5. But for that to happen, a day like today, I think then we really need to undershoot the therefore we really need to undershoot the CPI. I'm just looking at Selrap's question. Do you wait always for a chart pattern to enter, or could even enter at market, for example, the euro dollar later today? Oh yes, definitely. I'm watching data, and if the data is something that tells me that I need to enter a position, I can enter at whatever level, and then, but I will still first of all have levels in my mind. But levels are, a famous person said, levels are there to be broken. So I mean, just enter and see if your level holds or not after that. Right, then quick look at what's going to happen, because we do have the Bank of Canada. So on the dollar Canada today, so we could have like a double whammy or a couple of saloon doors on the dollar Canada today. We always know that the anything happening in Canada, whether it be the Bank of Canada, of course, or the labor report, has a potential to make Canada move quite a bit. On the dollar side, so we are under this traffic island, which is 135.10 to 135.20, call it. We are under it right now. So your zone here is 134, the figure. That's going to be important to watch, in my opinion. If that would give way on today's combination of US CPI and Bank of Canada, it's possible then that we are going to have a look back at what's happening in the 132s. 133, 130, the high 132s, that's possible. If in turn we get a sticky CPI and then a mellow Bank of Canada, we are likely going to retest what's happening around 135.5, 135.60 for a starter. This level here, 136, figure 10, should really cap the debates. If that goes, then I think it's dollar CAD will have more potential to go higher. Looking at what's happening in the other markets on oil, I would suspect that this is going to be a tough nut, a real tough nut to crack on the dollar Canada. What may be an interesting watch as well today, seeing the strength of the euro lately, is the euro Canada, because that has been moving a bit sideways together with the oils and probably, whoops, what happened there? Probably the better Canadian labor report as well. We are hanging still above that 146.40 zone, which always has had an influence on what's happening in this cross, and we are trading below our prior highs, where this trend line is coming in at 147.5. So we've got about 100 points here, 146, 40, 50, 147.5. to decide what's going to happen with this pair afterwards. If you break up, if the Bank of Canada is still dovish and the euro is still holding up well against the rest, this one could start to move higher again. If the Bank of Canada surprises, then we should put some stress or pressure on these. Call it 146 and a quarter, 146 and a half. Some pressure on this level, and then you will have to monitor what's happening here with this cross. That for the Canadian dollar. Aussie and Kiwi both a bit weakish. Aussie is stabilizing. A lot will depend on there's the combination that we have to watch between the US CPI and what's going to happen on that Australian labor report. For the time being, your tightest range here is 66.80, 66.50, but that's too tight on the combination of both. I would rather have a look at what's happening around 66.20 or even 66.10 when it would come down. And on the top side, to regain entrance to this broken channel, which actually could be a bear flag as well, you need to break above 67 the figure. So 67 the figure, 66, 10, 20, or when the dust will settle after the I'd say even the Australian jobs report. Kiwi kind of looking similar. Was a bit. I'm still surprised it didn't react at all on the RBNZ. I think the market is really saying like, well, yeah, that's RBNZ done and dusted. We are not going to pay too much attention to them anymore. And we are turning again around the 61.90 figure. So I don't have much really too tight. I think it's 61.5, 40, 45.50 again, where we should be looking at. And then the top side here is going to be very interesting if we get back to 62.60, 62.70. That's where the top side level right now lies. Last one I want to show, because I am in this one, is the euro yen. It's going right, just like the euro Kiwi, just like the euro Aussie, which actually is starting to find a bit of resistance now. This euro Aussie, but just like those processes, the euro is actually pretty strong. And then we have a combination between what the Bank of Japan new governor and deputy governors are saying. So we've broken above the prior highs. I think there's a fair chance we move, but we move higher still, but we have to respect what's happening in the 146.5, 146.75 zone. I've let some go. I'm only very small in right now. I'm going to watch where we close today, where we keep those highs, 145.5. But more importantly, for the medium term, what's going to happen around this crossroad here, and that's now around 146, give and take 63/4, 144, sorry, 63/4. That I think is going to decide upon the next, upon the viability of this move in the euro yen, I think. So this is going to be my really measure point. If in turn this continues to go. If it breaks 146.75, then we're talking about 147, mid 147s. And really, I'm going to leave it there. I hope we've helped you. Having a look at what's going to happen. Our ratio, how would the Bank of Canada sound hawkish without raising rates? Keywords or sentences we need to watch out for. Yeah, just watch out for them in saying that we're keeping the rate still, but it's only a pause. We are ready to start again to hike because the jobs market is still very tight. So we may be looking at hiking again further down the road. And they do have a press conference later on as well, an hour after the Bank of Canada decision. So the presser is always a way of springing a surprise. All right, Sab, did you have a look at the Swissy? What Swissy? Euro Swissy, dollar Swissy? If you ask me dollar Swiss, I'm very little interested, to be frank. I think I think Swiss franc as a whole is still, yeah, of course you were asking dollar Swiss. I knew it. Why did I even ask? Look at this Euro Swiss. It's hanging at the 98.5 again, right? If that breaks, it's gonna go. It's likely gonna go back into the 97s. And since my view on the euro is relatively, I wouldn't say uber bullish, but relatively constructive, I'd say that dollar Swiss is more prone to downside moves than really upside moves. That's my base idea. And we are at the end of this show now. Thank you still. Thanks everybody for joining us. And as I said, tomorrow Ryan is going to be back. He's going to be your main host again. Thanks everybody. Stay safe over the CPI. Trade safely. Don't throw all your eggs in the same basket, okay? And I want to hear only good stories tomorrow. Thank you, Stel.
Thank you, Kay. Awesome job the past week and a half. Well done. And looking forward to seeing Ryan again tomorrow. So thanks everybody for being here.
All righty.